Buckle up, folks. GameStop's stock is the roller coaster of Wall Street legend. From meme stock mania to today's wild ride, GME's sitting around $25 per share, a comeback story worthy of a video game power-up. Up about 64% in the past year, yet down 18% year-to-date. This stock's adventure is anything but boring. Let's decode GameStop's financial stats. Think game stats. The P/E ratio? About 142, super expensive. That's like paying $142 for a $1 health potion. Forward P/E is around 125, still pricey. Price to free cash flow is roughly 88. Imagine paying $88 just to get back $1 cash, steep bet. EPS growth exploded 50%, leveling up earnings big time. ROE sits at a modest 2.7%, not impressive, but GameStop has virtually zero debt and a huge current ratio of 8.0, meaning it's swimming in liquidity. So, tons of cash but small profits, can they level up further? Time for technicals. Where does GameStop face resistance or find support? Watch $22 and $20 closely. These are critical support levels. On the upside, the resistance bosses are at $29, then tougher challenges at $32 and the big boss at $37. Can GameStop power through these ceilings or will sellers push it down? It's a bulls versus bears showdown. Let's talk momentum. The 20-day moving average indicates a positive short-term mood. But the 50-day and 200-day averages? They're neck and neck around $25. GameStop is teetering between bullish and bearish trends, and we're watching closely for a possible death cross signal. Stay alert. GameStop's latest earnings were a mixed bag with a twist. Revenue dropped 28.5%, missing estimates badly. But guess what? Profits surged, doubling year over year thanks to aggressive cost cuts. It's like winning the game despite fewer points scored. They're profitable again, but sales are still shrinking. Can they sustain this momentum? Welcome to Retail Rumble. GameStop versus giants Best Buy and Amazon. GME has sky-high valuations, tiny profits, and declining revenue compared to these retail titans. Analysts prefer Amazon's scale and Best Buy's stability. GameStop? It's the scrappy underdog, high risk, high potential, but fundamentals? Not exactly championship ready yet. Analysts aren't cheering. GME gets a consensus sell rating with a price target of just $10. Harsh? Maybe. But remember, analysts missed GME's epic meme rally before. Still, they're signaling caution, high valuation meets weak fundamentals. Proceed carefully. Major news flash. GameStop's diving into Bitcoin, stockpiled billions in cash through new stock offerings, and Roaring Kitty, the legendary Reddit investor, recently returned, sparking excitement. They've aggressively cut costs and closed stores. It's a transformational year. Can GameStop reinvent itself successfully? Final verdict? GameStop is a hold. It's high risk and high reward. Massive cash reserves, zero debt, and turnaround potential meet declining sales, tough competition, and sky-high valuation. If you're already in, maybe stay for the ride. New investor? Proceed with caution. Thanks for watching. Smash that like button, subscribe, and comment your GameStop predictions. And remember, this is not financial advice. Always do your own research before investing. Game on.